everybody, also in Asia, right? Not just the US, but also in Asia, so everybody's getting ready, central bank-wise, to in the second half to sort of follow the Fed and also go a bit down. Certainly would help the economies. Therefore, yeah, you can consider it a risk case, but I would argue, right, if I start at where it emanates from, which is the US, if I look at all these indicators that I'm watching, if it's excess savings in the consumers more than halfway down after COVID, so it's not going to collapse tomorrow, but all these things suggest it has to slow. Probably slightly below trend growth is where we think, so soft landing, but nonetheless. So long story short, I'm not that worried that the Fed won't cut, but yeah, certainly is a risk. If they don't cut, it is a headwind to also Asian markets.
Indeed, but you do think that your base case is that the Fed will cut twice this year, starting September.
Yes, absolutely. Right, and there's also other indicators. So I mentioned the consumer side. It's already getting a bit stretched. Right? And we see as an offset, this is maybe also quite interesting. Right? It's not only the sort of ammunition for consumption isn't completely spent, right? But it's certainly more than half is spent. But you also see that if you don't have that ammunition anymore, what do? You go into credit card debt. Right? It's all things we can track. Right? So credit card debt is up, delinquency is starting to go up. Right? So all this suggests is not that sustainable, which then in turn suggests, right, things, including inflation, are about to slow, certainly in the second half.
Okay. Hartmut, we're just getting some lines from Governor Ueda, and a lot of these statements are statements of fact about yen depreciation. FX moves are among factors that affect economy and prices. Weak yen pushes up import costs, have impact on economy in other ways, such as through demand. BOJ will scrutinise yen moves' impact on the economy and guiding monetary policy. But this was the standout for me. The BOJ may need to respond via monetary policy if such impact from yen moves affect trend inflation. Is yen depreciation going to get to the point, Hartmut, where it spurs the BOJ's intent?
I'll be honest, the confidence in that, we already thought, they would sound a lot more hawkish than they actually do by now, so in spring, and not quite as hawkish. So I think at this time for the markets to really be convinced, you need to see some actual real measures. So yes, we have penciled in 0.25 on the short end for the second half, right? And you could argue, okay, if the BOJ really just on a small scale goes up, and yet at the same time Fed goes down, right? You'd expect the currency move. But I would bring it back to the US dollar, right? Ultimately, I think at this point, unless the BOJ really shows some more concrete action, right, it's all about the Fed in a